If you are a business owner and you are structured as an LLC and you own that business by yourself, listen up. Whenever you try to apply for a loan, whenever you're trying to get a credit card, you're always asked to PG the deal. That's personally guarantee the deal. What that means is, in the event that you default, that your business defaults on the loan or the credit card, you are going to have to personally be responsible. What I want you to do is I want you to Google classification of a taxpayer. Again, classification of a taxpayer. And what you're going to find is the IRS's website pulls up. And if you read that, it's going to say the term United States person is a citizen or resident, a domestic partnership, or a domestic corporation. So if a corporation is a person, why are you always giving your social security number to PG a deal? Why not give the information for that corporation and let that corporation guarantee the deal? You know why most people don't teach you this? It's because they don't know it. You know why your accountant, your CPA, or your enrolled agent is telling you, no, you don't want to be a corporation. You're going to be taxed twice. Do you see that how their only concern would be taxes? You operate that business January through December. Surely the only reason why you have a business shouldn't be to worry about taxes. But you have to understand that's what they're telling you. And let me explain double taxation to you. Simple and easy. If I asked you right now, do you want your business to be separated from you? You would probably tell me yes. Whenever you're applying for a loan or a credit card, do you want them to, pull your social security number? You would probably tell me no. So here's the meaning of double taxation. If you want your business to be separated from you, that business pays taxes, you pay taxes. That's double taxation. What they're not explaining to you is how much is the tax. You see, there are so many things that you just don't know. Understand that if you go to a lawyer, he or she is supposed to tell you about the law. If you go to an accountant, a CPA, or even a road agent, chances are they're going to talk to you about finances and taxes. That's what you call departments in a company. You have a legal department, you have an accounting department, you have a human resources department, you have an operations department. You know what I'm saying? You have departments. You shouldn't build your business based on what just one department tell you. You should look at the whole business as a whole, right? And if you know that you don't want to use your social security number to personally guarantee anything, how about you give another person your corporation? And I'm going to end this with this conversation. I introduced to people what I call the legacy builder. That's when you have an operating company. That's what you do every day. Simple. If you sell lemonade, let's call that your lemonade company. You have a parent company. That's a corporate office. You have a real estate investment trust. That ain't nothing more than a property management company. That's the landlord. And you have a holding company. Nothing more than a company that's holding assets. These are all 4 separate people, 4 different bank accounts, 4 different EIN numbers, just totally different companies. Because people like Donald Trump, Warren Buffett, Jeff Bezos, Elon Musk, they own multiple companies. If your companies that you own decides to do what's called business to business transactions, here's what that looks like. Your lemonade stand sells lemonade on the weekend. Your lemonade stand is called ABC Lemonade. That's your operating company. That's what you do on the weekends. You might walk dogs, drive trucks. It don't even matter. That's your operating company. Your operating company is going to receive an invoice. from the corporate office. Why? Because that name that you use on the weekends to operate, your corporate office owns that name, and that corporate office is saying, hey, because you're using that name, I'm going to charge you a naming fee. Who cares? Bam. You pay that invoice. Not a problem. Now, your corporate office has money in their account. If your corporate office receives an email from the landlord saying, hey, because you use 123 Happy Lane, I own 123 Happy Lane, and I'm going to charge rent for 123 Happy Lane. Your corporate office pays the rent. And then all of a sudden, the landlord has the money, and then the landlord gets an invoice from the holding company. Hey, since I got to hold all your assets, I'm going to charge you a fee. Landlord pays the fee. Now, the holding company receives an invoice. Now, why would the holding company receive an invoice? Well, that operating company that introduced the corporate office, the landlord, and the holding company to one another, the operating company, the lemonade stand, say, hey, since I introduced all of y'all, I want my cut too. I'm going to charge you a fee. It's called a finder's fee. Not a problem. You have now just taken $1,000 and showed that each company received the payment. Now I know what you're thinking. But what about the tax on that? You see, as I mentioned previously, you are so used to being an employee, you don't even know how to think like a business owner. You see, because employees, you're so used to every time you work hard too. You work extremely hard. Every time you work and you get paid, taxes are taken out your check, bam, automatically. And you have to find a way to survive off of what's left. Well, you see those people, those corporations, they don't work like that. You see, a corporation receives money, and before they pay taxes, they have to pay their bills. So corporations gets income, pays the bills, and then pays the taxes on whatever they have left. So if a corporation receives $1,000 and then pays out $1,000, what are they paying tax on? So if you do that, business to business transactions, you do that 4 times a month. Well, each company has $4,000 a month in income. You multiply that times 12, that's $48,000. Do you know a credit card processing company, a bank, or any other financial institution, they can give you a loan based on your accounts receivables, based on that $48,000 that you would technically generate. And all of a sudden, I just changed your life in less than 10 minutes. And somehow, some people are still so confused about money, they think it's a scam. Have an amazing day.